they may give you information first on that to say, well, we're going to pay this amount. And then if it's not that bad, you will ask yourself why, and they will give you an explanation, right? If it's a situation where it's, you can't even speak, then afterwards they will explain to you why, but they will put it in the contract, right? Now, as I'm saying that, there's a responsibility. This is for all type of insurance. It's called the duty of disclosure. So the policyholder, the insured, needs to disclose material facts relating to the subject matter. In health insurance, it would be your health. The insurance company also has that duty to disclose information on how the policy works. What a lot of us do, we know Matonia has health insurance. Matonia, who your health insurance with? Well, I did company X. They good? Yes. Well, they just run by the company X. I want a health insurance. The person is explaining and all he's saying is, yeah, I know. Yeah, I know. Not listening. So Matonia understands what she has, and she knows how to operate so that it works for her. You now have a situation, and they tell you it's not payable. You see why I don't like insurance? No, you need to take your time, and I'm saying this to everyone out there. Always get the information and understand. Education is the most important thing when it comes to buying an insurance policy. And you need to understand different policies will have different tweaks that your advisor, your broker, the insurance company needs to inform you about. So that's where, from my experience over the last 15 years, there isn't any fine print. There is a lack of understanding or researching or asking questions or not paying attention. I've experienced persons come back and say, but you never tell me that. Because all they say, I have insurance, right? It's not like that. So the answer is there is a limit in a contract year. And I didn't say calendar year. So the reason for that, your contract starts from the dates approved to the next year calendar of the day before or the same day, right? However you want to look at it. So you take out a policy August the 1st, the last day for that policy will be July 31st, 2023. So it is due August the 1st, 2023 for renewal. And that's your policy year, okay? So your policy year could run between 2 calendar years. Any other questions? I like questions. It makes it nice. You might have a bad experience. Go ahead, Brian. Okay.
I have another question.
Go.
The question is, because with my experience, right, I have experienced stuff with insurance company where, it's the first time to sign up and stuff, but then it's like for the health part, they want all information, like detail, like things you're not even willing to share with anybody. Like, they want it, like, for what reason?
Good question. I appreciate your question, and it's an important question. So, insurance is risk management. Risk management. And what you're doing when you sign a contract is transferring your financial risk of losing money to the insurance company. Therefore, the insurance company will be invasive. They will want to know your health status, your age, height and weight, if you had any past injuries, sickness, if you were born with a specific condition. They'll want to know your family history. They will want to know if your parents died from a certain condition. They will want to know if your siblings have any condition, right? And the reason for that is having that data. They cannot ask you everything, right? But they try to capture as much information to get a comprehensive report on how to underwrite your application. And that's why I said insurance, when you pay a premium, it is fair but not equal. So, an overweight person could pay the same amount as an underweight person. So there's a weight range. You fall in the good band, no ratings. You fall under it, 10, 20, 30, 40%. You fall over it, same amount of percentage. Because those signs lead to certain conditions that our actuaries, which is people who will determine what rates to use, they will now tell us where we can work within those figures here, right? Plus, insurance has to make a profit. So if somebody is coming in with a high potential of being ill and claiming a lot on the health insurance, then they will want to charge you more because there would have been other persons inside already contributing and not claiming as much. So it must be fair but not equal. All right? Thanks for the question.
All right. Alan, I have a question that came in via online. The person is asking, they would like to know if you had a health insurance and you lapse on payments for some years, can you start back payments from where you had stopped, or if you will have to get a new one?
Okay, very good question. Thanks for the question. So you cannot start back from where you stopped. So in the contract, again, there's a condition that will explain to you by not paying your premiums, your policy could lapse. If such happens, there's still another time frame for you to reinstate your policy. If you go beyond that first instance, they may have another condition where they say, well, okay, we will want you to do a medical before you come back, because what is the reason for not paying, and then what is the reason for urgently wanting to come back, right? So it is important to keep your policy active, because the unforeseen circumstances, if it arises and your policy is not active, the claim would not be paid. Now, we're not talking like 30 days or you miss 1 month, right? Based on what the person said, they did not pay for years. So normally once a year go by, maybe even 6 months, they will ask you to do, an insurance company will ask you to do a new policy, because the data gathered during the application, that could have been a year, 2 years, 3 years. You could have a policy for 10 years, and then you decide for 6 months you're not paying. What happened after that 6 months that boost you to come back? Also, you'll be older. So if you're older, the premium has to change, right? Because there are some insurances, your age will affect the cost. Yes, I know. Thank you, Pastor. Right, so to the person listening online, you will have to do a new application. And the company has the decision to whether to accept or decline. And let's say during that application you withheld information that is pertinent to your health. If it arises and the company could prove that that happened during the lapse period on cover time, they could, what you call, void the policy from the beginning. Right? Void ab initio, that's a Latin term, and no benefits will be paid. So it's important to keep the policy active. It's important to pay. And yes, everybody miss a bill. So sometimes we choose whether to pay the light bill or the water bill. Sometimes we just totally forget. Sometimes something come up and you say you go juggle around the little money, it happens. But just keep in mind that you don't want it to happen for 3, 4, 5 months. 1 month, 2 months, and then pay it back and get back on track, right? Some companies, what they will do, if you miss a month and then you brought in a claim, the claim is for that month, they will alert you, hey, you have not paid us yet. So only when you pay, then they will pay the claim. right? So just before I leave health insurance, there's so many things that we could talk about health insurance. There's so much things that I can mention. But what I would like to tell persons is money always have to spend. Can't get away from that. So you have to figure out what is the most economical way, not to spend it now, but to get access. Insurance is about getting access to monies that you cannot save with the little money you're getting. Let me just explain something. If you're working for $1,000 and you're praying to get a raise and you get $500 more, you know what most people will do? Their lifestyle will change to a $1,500 lifestyle immediately without any investments. When I go and do presentations to groups, one of the things I tell them, if you had a job that's paying you $2,000 and that company has a group insurance and you get an offer for $2,500 somewhere else, you might end back up in the same position, but you'll be spending more money outside for the health insurance. So there are different options, right? So sometimes you need to understand what you have and not just look at the big figures, because most of the times we would not buy insurance first because insurance is not tangible. You cannot feel it. You cannot hold it. You cannot flash and say, that's my new phone or that's my new ride. All you see my house or paint it over. No, it's not like that. But it is one of the most valuable assets that you can have that could put you in positions. Let's imagine Brian is a millionaire. Right? Brian is a millionaire. And he decides he needs insurance and he living the life. But this gentleman, I call him Rasta man. Right? Rasta man is a humble man. He working hard, but he decide to buy insurance. Something happened to both of them. Table knock, because I want nothing happen to Ollie, right? But something happened to the both of them and it's similar. Brian spending out $1 million, but Rastaman insurance company helping him. Who spend more money? Okay. So what you find in the world, the rich people buy insurance. The athletes, the movie stars, the politicians, all of them buy insurance. Are you telling me that they're smarter than us? We're trying to be like them. So if we're trying to be like them, we have to now think smart. If you had $1 million, you don't go and build a house with your $1 million. You go in the bank and take a loan. And if the project fails, you still have $1 million. The bank could hold the property. Sorry, I didn't say that, right? Right? Yes, that was just a little humor there, but you all got the concept, right? So, life insurance. Nobody likes to talk about this one. I got to understand it a lot better when I call this lady name. Her name is Judy McCutcheon. She had an influence on my life when she was a manager of a company. Right? I worked in a company, she was my manager, and I can tell you, in the way she explained it to me, it made me understand how to relate it. She said, Alan, never try to sell. You know, people tell you as a salesperson, you need to go out and sell. No, you have to go out and inform, information, right? And you have to believe in the product yourself. And you have to buy the product yourself. Because if you ain't buying it, you can't sell it to anybody, right? So what is life insurance? Life insurance can be defined as a contract between an insurance policyholder and an insurance company where the insurer promises to pay a sum of money in the exchange for premium upon the death of an insured person or after a set period. So most people look at life insurance for death, right? But that's not the only how you can use it. The last line said after a set period, and I'll start with that one first. There are policies that can give you back money after a set period, right? So that's one advantage. Going back to Brian again, because he's a millionaire. A lot of us think we're not millionaires when we are. And we could be if our net worth is calculated, our assets versus our liability. So Brian have land all about the place and everybody watching the land that Brian have. But Matonia was buying a little 100,000 policy here. Then she got increased, she buy next 200,000 here. Matonia's life policy or policies is worth the same as Brian's land. He has actual assets that he could sell, but she has assets also. It is an asset. You know why? If she had $1 million in life insurance, she could buy all Brian land. She could take Brian land. She's still paying a little loan, but she has a life insurance now with the land. She's now $2 million. Brian is $1 million. Because he sold the land, he has the cash. She has a debt, so she might be paying her $5,000 or $10,000 a month. But she has the land, $1 million worth of land. She has the life insurance, $1 million worth of life insurance. If some unforeseen circumstance came, she died, she not to sell the land to pay the bank. The policies will pay the bank, right? So life insurance is not just if you die. It's an asset that you can use when you're alive to secure or make your life better. It is also there to leave as a legacy, right, for your dependents. Now, there are different types of life insurance. Named endowment plans, you have term insurance plans, annuity plans. ULIPS means universal insurance policies, money back policies, whole of life policies. I will say something. Some people might argue with me, but I will say this. You say all of these fancy names, and in my mind, it breaks down to two types of policies. It's either a policy that will go for a specific period, or if you want to say term, or it's a policy that will go for all your life. That is what it basically turns out to be. So you could call it an endowment. It means that it goes for a specific period. You could call it term insurance. It means that it goes for a specific period. Right? Whole of life means that it goes for all your life. And the universal is just a modern one that also goes for your whole life. Now there's a policy here, number 2, it says money back. And what that means, that type of insurance policy is designed to give you back money. But that will also be a term. When that term period is over, you will get a certain amount of lump sum. Some companies have policies that will say you get $100 and something thousand in 20 years, and that's what insurance are there for. But this is what I need to get you to understand first. You need to know which policy is best for your life at the time, not what an agent wants to sell to you. If you're going to build a house, a specific policy is needed. If you never had insurance before, so this is my opinion. I look at life insurance as a foundation. Your foundation should be solid, not shaky. Your first policy should never be a policy that's going to expire in 10, 15, 20, 25 years, because then you're wasting time. You need a policy, in my opinion, that's going to be solid and stand the test of time. But the key in purchasing that policy is purchasing it while you're young. Because when you're younger, it's cheaper. The problem that we have is that we don't share knowledge to the younger persons. We don't teach them in schools what they need to do. Right? I've heard stories about Jewish families that will give their children $1 and say, listen, turn that into 5. And that child had to think of ways to turn it into 5. Right? Now, if you look at, going back to the bigger countries, inheritance. Why are certain families leaving millions of dollars for the next generation? They're not just leaving it blindly. You know what we just say in the Caribbean? You have to work hard for what you want. I don't give you nothing easy. And then you work hard, you lift up yourself, and then you make your child go right back down to zero to work hard to lift up themselves. No. You work hard, you figure out certain things, you teach them, and then you allow them to pass on that. So if I leave 50,000, and Brian is my child, and Brian leave 100,000, and Pastor is Brian's child, and Pastor leave 200,000, in a couple of years, it's a couple millions. Because you're making the life of the next generation better, but you're not just giving them money, you're teaching them why is it important. So, I'm sure most of us heard people saying, oh, if my father and them didn't know, they'd have buy a piece of land long ago, because when you hear the price of land was cheap. Now you can't buy, they say land sapine was bought for nothing. And there's how much US a square foot now. So we have to understand the value of passing knowledge. Now going back to life insurance, right? These different policies have different places in your life. So when you get that foundation policy, for example, so you're young, you take out a whole of life or a universal plan. That's my suggestion. It's building a cash value, it's growing. You reach a point in your life now that you need to buy land. You can use that same policy as security, or depending on the amount that the policy is and the value of the land, you can now take out another whole of life or a term that will go the time of the loan, right? What I'm saying is that term policies come to an end. You don't want when your loan finish, there's no life insurance. So Brian is married. Imagine Brian have a life insurance, have a mortgage, pay off the loan in 15 years, and then pass away in 15 years. What happens to the wife? Nothing. Yes, there's still expenses. Somebody still have to carry on, right? So we need to understand that placing these things in our lives is not always for temporary, but it's more of a permanent, something that you want to put there so that your family could carry on. It's a generational wealth. That's how you have to look at it. So that's why the next slide says the most two commons is term life, whole of life, and it has some differences, right? So the term life provides protection for a specific limited amount of time, such as 10 years, 15 years, 20 years, 25 years, 30 years, right? The whole of life is designed to stay in force, right, for your entire life, right? The term life typically provides no cash. It says typically. So there are some that will. Typically is the important word, right? No cash value, but the premiums are lower. Now let me explain how this would work. Sometimes in life, we don't achieve the same things in life. So sometimes you're older and you're just getting into a situation where you can afford to build a house. So you won't be able to purchase, based on your income, a whole of life. You could now, you see why I said it suits you based on the time. So an older person pay a cheaper premium for a term. But what some people get caught up with is I'll give you an example. 100,000 whole of life might be $100. And 100,000 as a term might be $30. Everybody jump for the 30. Not understanding in 10, 15 years it's going to come to an end. Here's the next thing that they didn't look at. You took a loan, but now you want to refinance the loan because a credit union giving you a better rate. So 5 years has gone, you had a 10-year term, and you're now going to our next institution. When the institution look at your document, you only have 5 years left. So you have to take that loan for 5 years or buy another insurance to give you additional time. With the whole of life, time has never, even if 10 years went by, it will feel as if no time has went by because it will go for as long as you live, not as long as the time is counting. And that is the importance that you need to understand. How does it fit your life and how does it impact what you're trying to achieve? Right? Whole of life has cash values. There are some people, they have more than one whole of life policy. They reach the age 60 and they decide to surrender the policy. They get a 25, a 30, a 50,000, depending on what they were paying, right? And they use that money as pension, retirement, go have some fun, because they invested. But they still have a backup policy. So I wouldn't tell you if you're going to surrender your policy, it must make sense. Is it a medical situation, an emergency? Because you could take $25,000 today and die tomorrow, and the insurance company would have paid $225,000. It puts your dependents in a worse off position, right? These are the things that we need to understand, right? So term insurance and whole of life are the two main types of life insurance. Now, there's something I wanted to touch on as I was speaking about loans, right? Most persons purchase life insurance to get a mortgage. Most persons, right? And there are technical stuff like beneficiaries. Who can be a beneficiary? If you put in a child as a beneficiary, then there should be a trustee, right? If there is no named beneficiary and then you have an estate, you should do a will, right? These are things that your advisor should be giving you advice on, right? You want a beneficiary that is revocable also. You don't want an irrevocable beneficiary because it cannot change. It cannot change. Once you sign a form for a beneficiary and it says irrevocable, it cannot change. It means you and that person fall out, they bad minding you, and for the rest of your life you're vexed because they have 100 million to get. And that killing you faster than anything else, right? Now, there are many reasons, right? You want to have an irrevocable form. You may have a child, and then you may have a next child. So you want to add, and you may want to make changes, right? Or you may divorce, and you may have a new partner, right? You may want to make certain decisions, right? You may have the husband first or the wife first or the beneficiary, but now you want to put the children and remove that person. So these are decisions and things that you have to think about and understand. Also, assignments. A lot of people get confused with assignments. An assignment is a condition or a change that you can make to your policy given ownership to a financial institution. Right? Once you have that an assignment, some people get emotionally involved and they say, well, okay, Brian say leaving $500,000 for your wife in a beneficiary form, but then he took a loan for the same $500,000, right? What happens in an insurance policy is that precedents will take place and the financial institution becomes the first person to receive money. Thereafter, his beneficiary will receive whatever percentage. That is why it's always best to put a percentage. So you put 100%, if it's by 3 persons, it's 33.333. If it's 50-50, you put a percentage. What percentage of your life insurance you would like to give to your beneficiaries? So, same $500,000, but Brian paid off $250,000. When an insurance company is paying on the debt of their client to their financial institution, no interest is calculated. So if the balance at the time of his debt is $250,000, the bank, the credit union could do all the multiplication they want. $250,000 is what they will get. Then the other $250,000 will be divided, whether it's 100% to one person, or 33.3% to 3 persons, or 50-50, and that amount will be divided in that percentage. And that's the best way to do it, right? If you're not sure at the time of your application, you put estate. Another thing I would like to say, when people divorce, they tend to forget. And then they get married, and sometimes the children could lose out. Let me explain this. So you have a child with someone. You're all divorced. Then you marry somebody new. If your beneficiary is stated as estate, that new husband or wife has more rights than the child. So you need to be specific, right? Sometimes we're not sure and we have to put estate, but in most instances you need to be specific. It could be you put your mother, and then your mother get married. And your mother dead, but you didn't change it. Her husband is entitled. Her husband is entitled, right? So, right. So I'm just saying these things because a lot of people don't take life insurance and insurance serious, but there's so many different angles that you can look at it from, legally, financially, and it affects our lives, right? So just putting that out there. Go ahead.
Sorry, I was just, as we were suggesting that's why it's important to do reviews of your insurance policy ever so often. Because once you're doing a review, you might say, oh, I didn't have that, I didn't remember. And sometimes situations change, different things change, and at that point in time, you can now change the beneficiary information and do certain stuff like that. Another thought that came to me concerning the term life, if you have to take a term life because of your affordability, it's a good advice to take a convertible term life that can be converted later when the financial situations change. You can now convert that term into a whole life policy.
Very well said. Right, so I have this clip here just to refresh your mind on when you think about life insurance, it's an asset, right? There's a key there, and there's the word mortgage, right? And my concept there, it's a key to get you to qualify, right? Life insurance is just a part of your qualification for a mortgage. And why financial institutions don't want to be real estate agents, and they don't want to be destroyers of homes. You pass away and you have to take the home from the child so it helps to have that additional security. Let me tell you, when you take a loan, your first security is your job. But your greatest risk is not losing your job, because you could get another job. When you're dead, if you're Lazarus, that's the only person that's come back, right? So, and then I spoke about your net worth, your assets minus your liability. And if you look there's a house, there's some money in a bag somewhere. You might have some in centric value painting or whatever, you have your vehicle, you might have some stocks, but little one in a folder below says life insurance policy or insurance policy. It's very important. All your bills subtracted from all what is actually yours you could probably see, sometimes you go online and you see somebody say their net worth is X and X millions. It doesn't mean that they don't have bills, right? But they put things in place to raise, right, what they're worth. Now, nobody could ever place a real value on your life. But what you do when you take a life policy is that you're trying to change your future. You're trying to change your present situation, right? You're trying to change your generation to come situation, right? It's the least that you can do, right? And there's a saying that I've learned since 2017. When you know and you know that you know, confidence replaces fear. Right? Sometimes we are afraid of doing things because either we don't understand or we hear anything on the side of the road. The important thing is to ask someone. Matonia always call me and ask me something. Or I will always call her for something else and then tell her about something else relating to insurance. And I guess that's why I'm here today, right? Because we always have a good conversation, right? So, any questions on life insurance? Right, good. So, there are many types of insurances. The next one we're going to tap into that has many different areas is general insurance. See, motor insurance, home insurance. We already spoke on health. Fire, marine, crop, travel. We're not going to touch on all, right? We're just going to mention on the two at the top left, which is motor insurance and home insurance. Right. So I was trying to think about, I don't like to use a lot of big insurance words to explain stuff because it will mean nothing to some people. I like to really break it down and explain it in a way that it's like a grassroots explanation. So I was trying to figure out how to explain this and I keep looking, how could I explain this? And I found this because I wanted to explain motor insurance as a suit, but I wanted to have a good example. So we will start at third party. So motor insurance, one, is required by law. It's one of the insurance that you must have if you're driving on the road, right? You can have a house, but you don't have to insure it. You have your life, you don't must insure it. You have health situations, but you don't must buy it. But motor insurance, and the reason for that, anyone could afford to buy a car, but not everyone might be able to afford to repair or replace the damages that they may cause by driving on the public road, right? So the lowest or smallest or minimum insurance that you will have to be on the public road is called third party. And I'm going to say third party is like having a pants and a shirt, right? So it will cover for damages like death or bodily injury damages. And when I say third party, what I mean by third party is in insurance, there are two parties, party one and party two, the insurer and the insured, or the policyholder. So the third party is any person outside of the contract. That's where the word third party came from, right? So your house, if a car run in and mash up the wall, it's property damage, but it's a third party. It's somebody outside of the contract. So that's what third party means, right? You causing damage to someone else. So because that's what it means, it's only going to cover a minimal amount of things. And as you see the two green ticks, death or injury to a third party, or loss or damage to a third party's property. So it means that if you're driving on the road, whether it's a truck or you're riding a bike or it's a car, this is what it will cover. You causing bodily injuries to someone or death, or damaging somebody else's property, whether it's their bicycle or their house or their wall or their fence, that is what it will cover. And that is why if you bounce another vehicle, it's third party. So that's why it's the minimum insurance covered. However, this coverage would not cover if your car burned, or if somebody thief your car, or if you had damages to your own car. So that's what third party is. Simplest way. Now after third party, there is third party fire and theft. So it's everything I said in third party before, and then what includes if your car was to burn, the insurance company will compensate you for your car burning. If someone was to steal your car, the insurance company will compensate you, right? And that is known as an owner damage or owner claim. Now, once that happens, there's normally what you call an excess, right? It may be a percentage of the value of the car, right? Or a fixed figure, right? So, going back to the suit now. So third party was shirt, pants. Fire and theft will mean that you have a tie with a waistcoat. So what I'm trying to say here is that it's an add-on. Nothing has changed. The third party aspect is still there, and then the fire and theft aspect is added. So when we get to comprehensive, I will say then you put on a jacket or a blazer. That's what it is. And now you have a full suit. But they are covering two different things. So in a comprehensive insurance cover, it will cover bodily injuries or death to a third party. It will cover damages to the third party's property. It will now cover fire to your own vehicle. It will cover theft to your own vehicle. And then it will cover damages to your own vehicle. And that is what comprehensive means. However, a lot of people who go to school assume comprehensive just means everything. And it doesn't, right? It is comprehensive of two or three aspects of what the insurance policy is covering. So it's covering the third party aspect, it's covering the fire and theft aspect, and it's also covering like damages to your own vehicle. So let's say you run off the road, but you didn't bounce somebody property, you bounce a tree or you run up in a drain, your car mash up, right? The comprehensive will help fix damages. However, there's a cap. Then what will be a policy excess? So if the excess on your policy is $1,000, it means that every $1,000 in claims to fix your own vehicle will be borne by you, right, and not the insurance company. So if your claim was $7,000, they will give you minus depreciation, 5,000, 6,000, 4,000 something. That's what you'll get. You'll put the rest for yourself. But the excess will always be the first amount taken out to help fix your own vehicle, right? And that's, in a nutshell, what motor insurance will cover. Comprehensive doesn't mean it just covering anything. Now, what is also included for owner damage? Let's say there's a hurricane, or there's a flood, or there's a rainstorm, and a tree fall on your car. That becomes owner damage. Owner damage doesn't mean you created the damage. It means that some damage occurred to the owner's property, and the owner could get compensated. So, for example, some young fella thief his father car, drive the car, didn't realize the car didn't even have insurance, and then bounce somebody on the road. If that person has comprehensive, they could claim, and probably sue too, but it will help cover their vehicle. Now, if there is no insurance, you have to go to the court, right? So insurance is there to mitigate the amount of expenses that comes from your pocket, right? Now just think about it. You have a small business and you need to go around, so you buy a vehicle. And the business is just going, and you bong somebody and it's $40,000 to fix that person's vehicle. When the insurance is in a position to help you, it takes a big burden off of your back. However, you will be penalized for having an accident. And in the following year, your premiums will increase because it must be fair but not equal. Go ahead, Brian.
Okay, good night, Brother Alan. I just have one question to ask. In regards to comprehensive, I noticed that it says that death or injury to the third party. What
Yes.
about the insured?
Right. Very good, very observant. Right. So it says death or injury to the third party. Right? Now, insurance companies have to protect themselves. So, I just spoke about life insurance. But you also have to look at fraud. So, a person may be in a tight situation and decide that they want to take their life, right? I'm just using this as an example. By running their car off the cliff or something, which is suicide, right? To get money so that their family can have a better life. People make those decisions, right? So to prevent or to deter persons from doing that act, you cover the third party as it relates to, in a bigger capacity. So the owner of the vehicle would get something, but it wouldn't be as detailed. So let's say the policy says $200,000 for death. The owner of the vehicle might get $5,000 or $10,000. Right? It's not that big. You have to have your own life insurance to cover because you're in charge of the vehicle. Right? Now, if a vehicle was to bounce your vehicle and you died, the insurance policy from the car pays you. Right? It all has to do with trying to make the driver more prudent, trying to minimize fraud, right? And the policyholder should cover their family under like family policies, like your own life insurance, your own health insurance, and stuff like that.
I was going to say that's not fair, but I guess you made the statement early. It's not fair, but it's equal. So,
Right.
because my thing is that I might be genuine in a wreck. Yes, somebody might genuine, but I have no compensation for my injury, or it's
Right.
minimum in terms of the injury that I might sustain. So let's say I got seriously injured, but my third party going to get as much to maybe recover their injury.
So-
but I'm the one who paying the policy, and I just getting a minimal just to pay doctor fee.
So that's why motor insurance that's why there's health insurance, that's why there's life insurance, right? And motor insurance, that's why I started third party first, because that's the most important part. The other parts are just toppings on top what is required to be on the road to add a little something for you as the owner. But it has nothing to do with health or life.
So you're suggesting that if you have comprehensive, it's wise to take off a life insurance policy.
Right.
Or
It is always
health insurance
wise.
policy
Yes, it's always wise to have your own life insurance
or health.
or health. So the third party is what you really focus on. The other part that says third party fire and theft or comprehensive is not speaking about an individual. It is speaking about the subject matter, which is the vehicle. So the other part covers the vehicle. Owner damage is for the damage to the vehicle. Third party fire and theft is for theft or damage to the vehicle. Right? Comprehensive has everything in it, but it's referring to the owner's vehicle or the third party aspect. And that is what a lot of people don't understand. Right?
I think a lot of the drivers need to know that.
Right. So there's a notion, right, that the benefit. Okay. So what people do, they look at what happens? There's an accident, and then you hear somebody get some money because there was an accident. But this person was in the capacity of a third party. So somebody hits somebody's vehicle, and then that person benefits. Like a bus. Every passenger on the bus is a third party, except the conductor and the driver. They are paid employed or gainfully employed. So they're not a third party, they are part of the owner's contract. So the third party is the passengers in the bus and the pedestrians.
They don't know that.
So, a driver and a conductor should have their own health insurance and life insurance for if anything was to happen while on the road. However, the driver and the conductor is in a third-party position if another vehicle was to hit them.
Okay.
No, not if they are at fault. But if another vehicle was to hit the driver and the passenger, they are now the third party because they are outside of that contract.
Okay.
And there's something called gainfully employed, which is, I don't want to go into details with that. That's more for claims, and we're not going into that tonight. But I'm here to give information because information is important. That's why having your health insurance is important. That is why when the government talked about having national health insurance, that is important because it will help fix a lot of these things. You see, insurance wasn't developed in Grenada. It was developed in countries that have NHS. So they look at it that these persons will be covered still. So it's not necessary in the creation of insurance to give the same set of compensation or attention. So when you get NHS, whether you're a third party now or you're gainfully employed, once the system works perfect or good enough, you'll be covered for health. For death, that's a different story again, right? But if you have life insurance, your personal life insurance, you're in the same position. Because your personal life insurance sometimes could be more than what the policy is paying you. No, if you have personal life insurance and then you're in that situation, then your beneficiary benefits even more. Because the life insurance cannot say, well, we're not paying because the insurance paying here, and the insurance here cannot say we're not paying because you have life insurance. Right? So, yes, I know it's eye-opening, but it's just, so every time you sit on a bus, you're covered. Don't worry. If I give you a ride, I'm covered, right? If you and your wife sitting down in the vehicle, you all are not covered because she's a part of you. Sometimes you want to take out your wife and make her money. Or sometimes your wife wants to take you out and make her money. The insurance companies have to protect themselves. These gentlemen thought and ladies thought about what the possibilities. So they're not saying that you cannot be covered, but they're going to limit you in certain ways so that you take different policies, take it from a different angle, right? Because you remember, the contribution of many for the claims of a few. You don't want every day you hear a man write off his vehicle and his wife dead in it, and he say he tire bus, or he mash the brakes and he ain't getting brakes. Right? You know, these things happen, you know, so they try to protect both sides and they try to make it fair, right? Yes, Brian, so thanks for the question.
One question, Alan. What are some of the circumstances that can cause an insurance company to not honor life insurance upon death? I know of many cases like that. What are some of the things that you can advise people not to do or to do
Okay.
in the process of the application stage that can cause a problem when you really think you're going to get the coverage, and for one reason or not, the insurance company says, oh, well, X, Y, and Z is not fulfilled, or there's probably misrepresentation here, so you're not going to get any coverage. So just talk a little bit about that before you close. Thank you.
Right. So you hit the nail on the head. It's called misrepresentation of material facts, right? An insurance application form will ask for general information on the person: name, address, date of birth, blah, blah, blah. But then there's some questions that they're going to ask you relating to, as in life, medical history. They'll ask you to disclose some information of yourself. Some people may choose to not say. So let's say somebody has sickle cell anemia. That doesn't mean the insurance company will decline your application. They might decide to charge you more, or they may decide to decline. You leave that up to the insurance company. If an applicant misrepresent information and then there's a claim, the insurance company during the application process will ask you to give them the right to get your data, because the EU directive, which protects data, would not allow an insurance company to go and ask your doctor information. So the insurance company has to have you sign saying that I give you permission to check your history. That's all in your application. Once you do that and you die, the insurance company now could go back to see, did this applicant misrepresent information, right, about their health, life habits, lifestyle, that would have influenced the decision during the application stage. And once that is found, the policy will be voided, right, from the beginning. That's one way. 2, fraud. I'll give you a scenario that I learned during 2017, where this gentleman died and a large amount was paid out. But the insurance company decided to investigate, so they hired a private investigator, and the wife was sending money to another country. That's why Western Union have all of these restrictions now, right? So she was sending money to another country, and this person was receiving the money, and they found it to be the same dead husband. So right, he pretended that he was dead, or they pretended falsified information, right? So insurance companies there's a time that needs to pass. Like if somebody's lost at sea, you can't just pay the insurance claim like that, right? You have to wait for a certain amount of years to pass before you can actually certify that this person is dead. Now, if after that time has passed and the insurance pay and then the person pops up, there's nothing that they can do about it, right? Because sometimes you're lost at sea and where you are, you just can't find your way back home, or you're just comfortable where you're, you know? Yes, yeah, you know? So the reasons for declining most of the time has to do with misrepresentation. Somebody lied on the application. That's for life insurance and health insurance. For vehicle insurance, myself and Matonia was speaking about this earlier on, so I just want to plug this in. A lot of people make mistakes when there's an accident, and I'm begging tonight, please don't do what you do. Whenever you have an accident, call the police, even if the other party say we go settle. Your insurance policy requires you to have a police report. Call the police. You can always settle outside of the insurance. That's nothing is wrong with that. You need to call the police, because if that person decide there was a foreigner and they're running out, or they're not going to pay you, you may either have to use your comprehensive benefits to fix your vehicle, or you may have to take the person to court. Police is the first form of evidence that the accident actually happened. You can have pictures, but a police report is a condition that is needed. It's the same for life insurance. A death certificate is needed. It's the same for health insurance. You must have a claim form that needs to be filled out. Receipts can be generic. They must be specific to your name, because Brian might have a condition, right? And he's okay, but then Pastor have the condition, and Brian buy the medication for Pastor. That's not how it works. It's for Brian, right? So the receipt has to have the name. There should be a prescription that went to the pharmacist, right, or a repeat. So there are certain conditions that insurance companies put in place when settling a claim. And if they are not satisfied, the insurance company could delay or deny the claim.
All right. I just want to add this. I don't think you spoke about it, or I don't know if you have intention to speak. Oh, okay.
You see, Brian, I think, Pastor, now I know why you're up here, because it's like I just read his mind, you know? Right. So homeowners insurance. We all build, and then we don't try to cover ourselves in that aspect. Let me just explain something. My first experience and why I got into insurance is that my dad built a house. And after we built the house in 2002, and I lied down in my bed and enjoyed the view for 2 years, Ivan come. And then I had to spend another 2 years away from that house, right? However, I saw the benefit of having insurance, making payments and being able to get back monies and stuff. But once again, people don't understand. I've met a lot of persons who complain that insurance did not pay them in Ivan, but there's a lot of things that I understood coming into the industry. And these are things that I would never do. So, a lot of persons come and say, I want insurance on my house. And somebody gives them a fire policy, which only covers if your house burns. It doesn't cover anything else. Right? So when you're buying homeowners insurance, you want to make sure that a certain list of perils, that's a word we use in insurance, are covered. Hurricanes, earthquakes, flood, fire, burst pipes, malicious damage, aircraft damage like a plane fall, windstorms, tidal waves, subsidence, landslip. You want to ensure, just to name a few, that these stuff are covered. The reason for that is that these contingencies could occur at any time and cause tremendous loss to your home, right? And that's where insurance will kick in and help you with rebuilding, repairing, depending on the situation. There's another type of policy. It is called all risk. In simple terms, all risk is an insurance policy that will cover everything unless specifically excluded, right? So that's a type of insurance policy that you can get for your house. It even covers like your laptop, your sports gear. Like if you're traveling and you went to another country, and it covers a lot of stuff as it relates. I think it's the best homeowners policy to have, all risk policy. But some companies sell, some don't sell, and it takes time for persons to understand. Now, there's another phase that I want to mention about construction of your house, right? There's two types of coverage that happens right now in the market. It's called under construction, but what should truly be covered is contractors all risk. The coverage should be on the contractor building your building, right? It's a more comprehensive cover. It will cover the materials. So what the under construction cover will do is, once you put the steel with the cement and it becomes a pillar, that's covered. When you cast the deck, that's covered. As the building forms, that is covered. When you have a contractor's all risk, the contractor now has to be more prudent. He has to have better security, storage, so that if, the shed burned down and equipments, whatever burn in the shed, or there's a flood and the sand wash away, all of that is covered under his policy. So it's a better coverage in construction phase. But once the house is completed and you have a homeowner's policy, right, it is important to cover your house with some sort of insurance. And the reason for that, when you build a house, it's new, most of the time it's a loan. You pay back the bank. You don't want a disaster to happen. You have to find more money to replace the damage and still pay in the bank. The bank can be smarter than you. Never allow them to be smarter than you. You have to be smarter than them, right? Insurance. A lot of people work hard to take a mortgage, and they're very adverse into taking insurance. But let me tell you this. So this is a house there. Let's say this house in America is $700,000 US. You think your insurance policy will be as much as your loan payment? No, it wouldn't. Same amount of value. The house is $700,000. The insurance coverage is $700,000, but you're paying less. Yet still, as a people, we are adverse to insurance, right? Now, when you take a loan, you're paying back 1-point-something million, right? With insurance, you will never pay the amount of money that you could receive back in benefits or your beneficiary could receive. And that's how you have to look at it in a positive light, all right? Homeowners insurance should be a must for everyone. Even the church should have insurance. Pastor, we got to have a talk. Yes, right. Now, this is my last slide. And I wanted to share this. Self-insurance. A lot of us don't believe insurance. A lot of us don't purchase insurance, and a lot of us speak negatively towards insurance. But I would like to say here tonight that everyone practices insurance. So if you didn't buy an insurance policy, or you didn't, with any company, whether it's life, health, or whatever, what you're doing is saying that you will save enough money to solve that financial problem when it arises. And that action is called self-insurance. It's a situation in which a person or a business that is liable for some risk does not take out any third-party insurance, but rather choose to bear the risk itself. So when you think you're not in insurance, you are. And this is the end of my presentation. Thank you.
But don't close yet. I have one more question for Adam before you go. Quickly, it's a common practice or a common habit that happens from time to time when there is a disaster. For example, a hurricane, a storm. People lost the roof or property, and your investors, or how you call them, the
adjusters.
The adjusters come in, and then people say, well, they didn't get enough money, and people complain that they didn't give them enough. What could be the reason for that?
Simply education. I'm going back to that, education. Recently, I'm just giving you a scenario. Recently, persons who would have taken loans within December 2021 to February, approved loans would have ended up in a position where they don't have enough money to complete their projects. So they took 400,000, they took 300,000, 500,000, but with the increase in cost of material, what the contractor budgeted for change. Now, it's the same with your property or your building. When you build, insurance for property is based on replacement costs, not market value. So, ever so often, you should always get a revised valuation. So that may cost you to pay more, but in the event of a loss, right, when the adjuster comes in, he's working on what the replacement cost of your building is. Not what you pay to build it, but what it's going to cost you to replace. And that figure, even if there's depreciation, your house will appreciate more, right, in value and in replacement, right? And simple stuff like that we do not practice. That's what happened with a lot of persons in Ivan. So they'd have built their house in 1980 something, $100,000, but that $100,000 house is $300,000 in Ivan. The size of the roof, the cost of materials to build back that roof is more than what they were paying for in insurance. So in a situation like that, it will be deemed as underinsured, and the law of average will take place where you're getting paid based on the percentage that you were covered for, right? So it's always important to, as the lady said, revise, relook, go over what you had. Don't just leave it there. Your policy document is also important. Keep it in a safe place, because that's your evidence of insurance.
So, does
Not here.
is there anything as underinsured?
Yes. So somebody might inherit a house and they cannot afford to pay the insurance, but they want to pay some insurance. So that house is $1 million. And let's say you're using a specific rate and that comes up to $6,000 a year. That person may not be able to pay $6,000. So they say, well, if I insure it for $500,000, they say, well, $3,000. Person say, okay. So that's 50%. So you're now underinsured. What will happen if you lost the roof? It will be 50% of that claim of the roof. So if the roof was 40% of the value, let's say 400,000, you'll get 200,000 because you'll get 50% of what the actual claim is, because that's what you're insured for, right? However, where there is a will, there is a way. So there is a process or a step that you can take to insure your property for 85% of the value, and you would not be penalized for being underinsured.
Tell me.
So it's the minimum you can insure for without being penalized. So if you know you're valued at 85%, the insurance company would not use the average clause to penalize you. But yes, you can underinsure, and people do that. And once you underinsure, what you're doing is my last screen. You're self-insuring the other percentage.
One more before we close. So you build your house. Most likely, if you took a loan, the bank would ask for an insurance, right? But so you insured for the value of the house.
Yes.
But later down the road, you put on a downstairs, or you put an extra bedroom on the side there. But you didn't insure. You didn't get
You didn't
revaluation.
revalue your property.
Right.
Yes.
Something were to happen, right? Would that part of that building consider as insured, or would I
So once you keep adding to your building, you are increasing the value of your building. You should. So I have a client. He bought a house, $250,000. His property is now worth 2-point-something million because he put apartments, he did this, he did that, he did that. and he invested. Every time he finished a phase, cost him $800 or $900, but he did it, and then he will come to us, he will call me with a new updated valuation. It also helps him because he has more equity in the bank. Every time he did something, whether it's out of his pocket or he take a loan and he finish and then he values and it goes up, he has equity. So it's always good to up, because one earthquake could flatten the entire building. And you have to think about, let's say your building was $400,000, and with all the work you did, it's now $1.2 million. Just by not increasing and not paying the premiums to have adequate cover puts you at a loss, right? So always the best thing to do is increase, and then you ask your insurance company for payment plans, whatever it may be, to help assist you in paying, because not everybody could pay as they ask. You may have to move to another company, whatever it takes. The general insurance market is a buyer's market. The people has the power, right? The insurance company set rates based on risk analysis, but the market rate is also influence where people or who people would buy insurance from, right? I want to say thanks for having me. It was a pleasure being here. I hope everyone here and in the diaspora and on the digital world would have learned something. Not everyone will agree with me with certain things that I said, but I always try to educate persons and get them to be on a level to look into insurance, because you have to keep looking. You have to keep looking. You have to keep learning. And once you do that, you put yourself in positions that you will never believe that you could have been in, right? So thanks, everyone. Have a good night.
Let's give Mr. Alexis another round of applause. We thank you so much for taking the time to come and to educate us. Like I said, it's always good to learn new things, and it's always good to be well informed. We have come to the end of our special presentations, but this is something obviously we would continue doing going forward in the next church year, because we realize that persons are interested in it and have demonstrated. There have been persons online as well. We thank you for joining us, and we truly hope that you would have enjoyed it. At this juncture, I'm not sure if Pastor has anything he would like to say, but let's just invite him for a minute or so, and he would close us off.
Hello, good evening. Mr. Alexis, thank you so much. I mean, well presented. I really didn't know the one about the bus driver and the conductor not being covered. That was a very interesting one. So bus drivers and conductor, all you know what to do, safeguard all yourself, get insured. But I want to thank you so much for a wonderful presentation. And I believe these are the kind of things that our church continue to do. Building communities to become the model for winning people to Christ, and to empower people, to really have a better life. And as a church, we want to ensure that people, and that's why we are having these sessions, really for you, the general public, to be educated about your own life. We had finance, we had about insurance, we had about will, and all of them was very mind-blowing and really solid, good information. And that is what we at the St.George's Baptist Church is about. But I cannot leave without in telling you about Church on the Beach. It's important. 31st of July, BBC Beach. This is an event, a family event. It will be held at BBC Beach in Wildwood Park. And we're expecting persons to be there. We are there for the entire day. The service starts at 10 a.m. The transportation start collecting persons, which we ask persons to park for which we got permission in the food fair parking lot, and along that route to be able to take you down to Wildwood Park. There is no parking down there, so you cannot get down there with your park. You have to park and then take a shuttle that we'd have available marked Church on the Beach that would take you down to Wildwood Park. And the service starts at 10 o'clock, run until 12, and then between 12 and 3 we have lunch. And in that time, we also would have, after lunch, we have the Children Village, Sister Liz, and then we're working very hard to set it up, Asha. And I think we have some things declared that they brought in for that. So they did a lot of work, the bouncing castle, the games they have for the kids. Some of the games I'm sure you have played in a while. But also they would have these games, and they would have face painting and all that available to you. At lunch, Liz and Roald is the person who's cooking lunch, but lunch, you have to pay for the lunch. The event is free, but you have to pay for the lunch and pay for the drinks and pay for the things that the children, at the Children Village, they have a lot of stuff there for the kids, face painting, all of that. It'd be very $2, $3 a dollar, but you have to pay for that. That's available to the children. So we're asking you to come and to be a part of that. So that's lunch. In lunchtime, Liz and Roll is cooking lunch, barbecue, you have waters, you have a number of things happening. Martin Alexander, he in charge of the bar. So you have the bar available to you. There's popcorn, there's snow cone, there are a number of things we have available. There's fried chicken and fries in the afternoon. At 3 o'clock, we have the live band performance, and that go until 7 o'clock. And so that availability of that, during that time, they have fried chicken and all kind of thing, for you all, whatever else, juice and cake and sweets that you could have. But that would be available then. We have Sabrina Francis, we have Touch of Grace that will be performing. We also have our own band here, Pure Love. We have a number of other bands and then individuals that we perform, and dances and all of that happening. That's at 7. So we expect you to be there, walk with your bathing suit, to come to be on the beach with the children. It's a family event. We invite you, men and women, to take your people. When last you went out with the entire family? A long time you haven't done that. The wife gone out, the man gone out on the lime, and they lead the children home now. An event for the entire family to come, and we're really inviting you to come and be there. We're all excited about it, and as a church, we're looking forward to having you there, and we expect us to come and really have a great time together, to relax and have fun. Also, we want to walk with the house games, all the house games that you have, the car, the snake and ladder. We have some people, it's the Scrabble King, come there, Scrabble tables will be done. We have more than 30 tables will be done where a person could play all kind of games. You have lunch and you could sit down and play all kind of games and have fun. And so we really, really put this together. A lot of planning for the past year. We've been planning this, and we really believe. Also, we want to let you know we plan to use all local talent. We want to build this event to help celebrate our local talent that we have here in Grenada. So we're not inviting any foreign artists to come and perform. It's all local persons. So that I want to tell you, and I want you to plan for it. July 31st, BBC Beach, Wildwood Park, Church on the Beach. See you there. Thank you for listening. Thank you for being here. Thank you for sharing. Thank all of those of you who are listening online. We at the St. George's Baptist Church continue to do the best we can to ensure that you are educated both spiritually and physically. We want to ensure that you live here on earth and be well informed, but we also want you to be informed that if you do not accept Jesus Christ as your Lord and Savior, we can tell you about that because we do not want you to go to hell. You understand? As much as we want you to insurance. So you insure to ensure that you have money when things go bad, right? So your good insurance you can have after you die is accept Christ as your Lord and Savior. That's the best insurance you can get. Stand with me, folks, as we conclude this evening and share together. Thank you for listening. And I thank Mr. Alexis for sharing with us. Very good. Let us pray. Father, we thank you for who you are. Thank you for your love, your peace, and your joy. Thank you for this beautiful relationship you give to us. And Father, Lord, we pray as we go to our home, you go with us. Thank you for Mr. Alexis and the word that he has shared with us about insurance this evening. We pray your blessing over us and our families as we go to our homes. And those who are listening online, we ask your blessing over them. This we ask in Jesus' precious name. Amen. Amen. God bless you as you go, and thanks again for listening. God, richest blessing over you. Thank you so much for being here this evening.